Welcome back to Small Caps, ladies and gentlemen. My name is Kerry Stevenson. Today I've asked Keith Bowes. He is the Managing Director of Lotus Resources. ASX code is LOT. Now, in June last year, they began their drilling program over at their Kayelekera project in Malawi. Now, that project was mothballed for 9 years, but when I last spoke to Keith, we talked about their DFS and how it had completely de-risked not completely, largely de-risked the project, and they're continuing on with the good work. But today we're going to talk about their sustainability report. This is their second sustainability report. I want to know what, why, and how. Keith, good to see you.
Hi, Kerry. Great to see you again as well.
Well, most people will know you've got the project over there in Malawi, but I wanted to bring you back today because you've just announced this second sustainability report. Why is this important, and how does it, I guess, improve the metrics or otherwise of the project?
I think there's a couple of things behind the ESG work and the sustainability report itself. So the first comment I would make is that working in Africa, working in Malawi, which is, I think, generally recognized as a very, very poor country, I do think we have a responsibility to work with our local communities to try and uplift them, provide them support and all those types of things. And that's something that we've been working on hard since we acquired the project back in March of 2020. And that's something that normally doesn't come out so well in, the DFS results that we talk about and all those types of things. So to be able to put out a sustainability report that can talk about the activities that we're doing, talk about our social work, talk about our environmental work, talk about our governance that we're doing in country as well, I think is really, really important. And I think, you and I have had a discussion about this previously. Why would we want to try and do something like this? What benefits actually result from it? And I think it's our social license to operate, which I've spoken about. But I think and I wouldn't say selfish, but maybe that's one way of looking at it. Why does the company go about and do that? And there are actually significant benefits for us as a company in terms of putting out these types of reports, doing all the work that supports the information that we have in those reports. And that's really to do with our offtake. So we know when we talk to a number of the utilities, and I'm talking specifically about the ones in Europe, ESG is very, very important for them. And they send us long questionnaires before we're allowed to participate in any of their requests for proposals, asking questions about what we're doing on the social side, what are we doing on our governance side, what are we doing on the environmental side. And only when we've been able to tick those boxes can we actually start to participate in some of these requests for proposals. So certainly all the work that we're doing now broadens the horizon or broadens the range of the different utilities that we can potentially contract with going forward. So that's one side of it. The other side of it, which is becoming really, really important, is that the European Union passed their green taxonomy. It came into law a couple of months ago, but actually only starts working in January of 2023. And what that would allow us to do, if we could tick those green boxes there, it does provide us access to lower cost financing as well. So for example, if we wanted to go down a debt financing route or something like that, and we looked at the European banks for that, by having a really good ESG profile supported by the sustainability report with all the metrics in it, it does allow us to access cheaper capital as well, which I think is of significant benefit to our shareholders too.
Well, certainly when I hear lower cost of capital, I'm sure our audience and those shareholders out there would go, oh, tick, yes, happy about that. So what has the report brought up? What's it showing? Can you do better? Is there more work to be done? And also, I guess, how much attention do you have to pay to it?
Yeah, so I think there's a few things around ESG. I think ESG is a journey. I don't think it's a fixed point, it's not a fixed thing you're trying to achieve. It's a journey you want to try and go through. So we released our first sustainability report last year, our FY21, which was really, I would say, quite a qualitative report and talking about holistic concepts and ideas of where we wanted to go and all that type of stuff. What we've done in the FY22 sustainability report is we've actually started to drill down and we've become much more quantitative in terms of what we've done. So now we start to record things, what is our CO2 emissions? In terms of diversity within our employment, let's record how many people are, how many females have we got? How many disabled people have we got? where are they coming from? Are they local in terms of, from northern Malawi, Karonga region, or are they coming up from the Longwe? All of those types of things start to come in with it. Recording, this has already been done, but it probably hasn't been collated. All the incidents that occur and how we've handled those, all the training exercises that we do with regard to things like perhaps human rights or, rehabilitation of the land and all those types of things. All of those have been done and recorded to some extent, but they haven't been centralized and put together in terms of, an easy way to let our shareholders and our investors and our stakeholders know exactly the types of things that we're doing. So we identified the things we wanted to talk about in FY21. In FY22, we're starting to report on those different things. And one of the key parts of the sustainability progress or map, I think, is probably what they call these material topics. So we had identified a number of material topics back in 21 that we thought were important, but this was more of an internal discussion. One of the things that we kicked off the FY22 ESG program with was actually broadening that out to all of our stakeholders. So we sent out survey to about 90 odd people that were across, government officials, Malawians, our own investors, brokers, and all this type of stuff. And we got a really good return rate. I think you had 68 of those 90 people responded to our survey, coming back telling us what they thought was really important for us to look at. We can then take those and we modified our material topics based on that feedback to identify the things that we want to talk about moving forward. And that's what we've used as a basis for this sustainability report, is those material topics. How are we going to measure success for those material topics? What are the metrics? And we're starting to report on those metrics. But as I said, it is a journey. We now have a starting point. Let's see how we're going to improve on that next year when we put out our third sustainability report and start to show some trends in terms of how we're improving in the various things.
Keith, you said a moment ago some of the material topics. What were some of those, and did they vary from first report to second report based on the survey?
I think what really happened was they expanded. I think we had maybe 8 or 9 topics in our first one that expanded up to 12 or 13 topics in our latest one. So there you're talking things like, water, you're talking about mine closure, you're talking about economic performance, you're talking about community liaison or community communications and those types of things. Those are the ones we're worried about or that we're focusing on at the moment. How we handle our waste rock, how we're going to handle our tailings, climate change, and all those types of things have come out as our material topics from that big survey that we did.
Climate change is coming up as a topic for everybody's lips at the moment.
It is, isn't it?
In terms of, I guess, the local communities, how well engaged are you with them at the moment?
I think we're very well engaged with them. It was one of the things that we identified when we acquired the project, that there was a lot of improvements that could be done there. And we've spent a lot of time talking to the chiefs, to the paramount chief, who's effectively the king of northern Malawi, if you wanted to try and do it. So we've got a really good communication with them, talking to local government, talking to a number of the NGOs as well. So we've built up a really good relationship with the NGOs in the area as well. And I think one way that we can demonstrate the good relationship we have is we're in the process of putting together this community development agreement. So a community development agreement is something that's actually legislated within the Malawian Mining Act. And what it requires is that the company, with the local communities and the local government, put together an agreement in which the methodology or the way that the projects that the communities would like the company to do are managed, selected, and put in place. So at the moment, the regulations or the Act specifies that we need to put as a minimum of 0.45% of our gross revenues when we're up and running into this community development fund.
Okay.
So the community development, it works out in round figures, it's probably something like $1 million a year. Sort of like that sort of figure, because it is based on our gross revenues.
Right. Oh, gross.
And what happens is that all the communities within an area around the mine, so this is within a 20-kilometer perimeter, of the mine, they're allowed to contribute or participate in this community development agreement, and all the communities decide on the projects they would like to have done using that money. There's a steering committee and a technical committee and all these types of things where they choose the projects and then implement these projects. And we've worked really, really well, I think, with the communities, with the NGOs, and with local government in terms of framing and putting together this community development agreement, because it is the first one that's ever been done in Malawi. We're the first company that's actually going down this path of putting in place this community development agreement. So there's been a lot of learnings, a lot of revisions being done to it until everyone's happy with it. And that document is now sitting with the Malawian government for sign-off. And then once it becomes active, as soon as we start operating, the funds go into the system, and we can then start to work with our communities in doing projects with them, and whether that be more schools, improvements to clinics, maybe water bores, providing some funding for attendance at secondary schools, and all those types of things is what we'll be looking at.
Oh, I just got a very lovely feeling, because a lot of people don't realize that what we do in this industry, in our mining industry, we get attacked quite a lot about, oh, mining, terrible, terrible. But, when I hear what you're doing over there in Malawi, which, as you said at the start, is actually a fairly poor country. So for Lotus Resources to be in there and to be getting into a situation where a percentage of your gross revenue goes back into the community to lift them out of that, I guess, that deep poverty, that's must give you a fantastic feeling. Just wanted to say that because, people don't recognize what it is that we do, and you're spending a lot of time and being very careful about it. But I want to ask you this, if I could, Keith. Malawi is a jurisdiction. They've got a new government, I believe. How committed are they to lifting their people out of poverty via these mining projects getting into production?
As you said, it is a relatively new government there. It's been in place since early 2020. So it's had a few years in place. Our next elections are in 2025. Mm-hmm. I think that when people ask me this question, what I always reference back to is that the president has stood up both in parliament and in public, and he has said that they recognize that in order for Malawi to lift itself out of its current predicament, and they've got problems with high inflation, they've got problems with food shortages, they've got problems with foreign exchange and all this kind of stuff. They previously relied on the agricultural industry to support the economic growth of the country, and specifically tobacco. Tobacco was one of the biggest exports ever coming out of Malawi. As you can imagine, in today's world where, everyone's trying to be healthy and all that kind of stuff, tobacco is not exactly the best crop to be growing in terms of getting revenues for the countries. So they've recognized that mining is a new area which they can look to try and grow the economy and to increase, get their GDP up, bring in more foreign currency and all those types of things. So there are at the moment 5 foreign companies, mining companies in Malawi looking at developing projects. There's ourselves with our Kayelekera project, and we're probably the most advanced because it's an existing asset that we need to turn back on again. But there's 4 other companies there. So you've got Sovereign Metals as one of them. They've got probably the world's largest rutile project sitting there that they're working through their various studies with. You've got Lotus Resources, which has got a rare earth project as well. That's just completed a feasibility study. So they're looking to go to the next step in terms of getting funding and all those types of things. You've got Globe Metals, which is another Australian company that's got a critical metals project in Malawi as well. They've also been there for some time and developing a project. And probably the new one is a new rare earth project there that's only come in the last couple of months called Lindium. So there's a lot of development there. There's a lot of support from the government to improve their mining industry, recognizing that the foreign currency that the mining industry can bring into the country is very, very important for them. So we feel very, very confident that the government will be supportive moving forward. And as we've said previously as well, the government actually owns 15% of the asset as well. Yeah. So 15% of the Kayelekera mine is actually owned by the government as well. So they're a partner with us in terms of the development of the Kayelekera mine.
Which kind of gives you a bit of, confidence that because they are a partner, they've got a substantial, that they are very keen to make sure that you get into production. Speaking of which, what's happening out there at the moment? What news? Last time I spoke to you was about 3 months ago, I think. A lot of interest in your project. And the last time we spoke about the DFS being done, obviously the focus at the moment has been on the sustainability report. But talk to us about a quick update. What's on? What are you doing at the moment?
Sure. So, I mean, obviously, the sustainability report has been a big piece of work for us, and we're very happy to get that out to the market. But we have been busy in other areas. So we've been working with our marketing person that we appointed in the US in terms of meeting with various utilities. So I've had the opportunity to attend conferences in Montreal in July, and I was also at the World Nuclear Association conference in London as well in September. At the Montreal conference, I met with a lot of the North American utilities, really to introduce Lotus Resources as a new company in the uranium space, but also to reintroduce Kayelekera, because a number of those utilities have previously bought product from Kayelekera, so it's not a new asset for them. So I met probably 10 or 12 of the North American utilities there, and actually had an opportunity to go into the US as well and meet some of them at their offices too, which was great. I could meet some of their chief, their buying people and all that kind of stuff. So really trying to get ourselves back up into, recognized as a potential new producer or producer coming back online again to be able to feed into it. So we did that in North America. I did the same sort of thing in London as well, but that was more focused on the European utilities rather than on the American utilities. So again, a reintroduction of the company, what our plans are in terms of going forward, both with regard to production and also timing. So we were able to give those updates. So we're moving well ahead with that. The uranium price at the moment is still staying stubbornly between that $48 to maybe $52 per pound mark. It would be nice if it was a little bit higher than that. So we're waiting to see what happens on that. I think the Russia-Ukraine thing is still influencing that market to some extent. We've also, so on the back of the feasibility study, you obviously get to a certain level of engineering work and confidence with your capital costs and all that. We have spent the last month or two going out to our various consultants in terms of putting out a scope and also getting some ideas of the costs for them to do what we call a front-end engineering and design program. So that's really to take us to the next level of confidence with our engineering and capital costs. So we're collecting all of that, putting the program together on that, and then looking to kick that off sometime next year, I think. But the other thing that's also taking a lot of our time now, or what we're really focused on, is our mine development agreement. So our mine development agreement is a document that is signed between ourselves and the government of Malawi and really sets the fiscal regime in which the project will work. So things like tax rates, like royalties, those types of the things are the ones that we want to discuss in that. And we've been working hard with the government over the last sort of 6 to 9 months on that. I think we're getting very, very close to have a final agreement in place, and we'll then be able to prepare the documentation and have a signing of that documentation, which I expect will happen maybe end of this year or maybe early next year, is sort of the timing expected from that. So that's another big tick in the box. Once we've got that on, we're much more confident moving forward with the development of the project as well.
All right, so talk to you mentioned you were over in North America, but also Europe. Keith, macro-wise, Europe's are they crying out for it? Were they like biting your arm off to say, make sure you give us some product? Because there's some real challenges in Europe as regards to energy at the moment. Did you find that they were a lot keener than North America? Kind of more of a macro view, if you like. I mean, how keen are they to make sure they get your product?
They're very, very keen. I mean, everyone's looking for geopolitical diversification of supply. That's an absolute key thing. But the one comment that I would make is that, I mean, people are maybe familiar with the nuclear fuel cycle. We produce the yellow cake. The yellow cake still has to be converted. Then it has to be enriched. Then it has to be made into the fuel rods that are used in the nuclear reactors. A way that, as you can understand it, a lot of the utilities, the way they've gone is actually, looking downstream from them. So they've gone out and they've signed up, let's say, the fuel manufacturing, and then they've gone back to the enrichment and signed up contracts for that. Then they've gone to the conversion and signed up contracts for that. It's really only very, very lately that they've started to go into a lot more detail around the actual supply of the yellow cake, which is where we sit in the fuel cycle. And we're starting to see that coming through as well. So there's, as I always try to explain to people as well, when you're looking at the fuel cycle, from the day that a nuclear reactor or a nuclear utility purchased the yellow cake from us, that fuel cycle is about 2 years.
Oh, is it really? I did not know.
So when they get the yellow cake to when the actual rod is manufactured can be as long as 2 years to go through that process. It can be a very, very long process. So what they're looking for, they need to be, they're looking for supplies in 2026 or something like that. They need to have the yellow cake a lot earlier from there to be able to meet those supplies going forward. So that's always an important point to make when people are looking at the fuel cycle and the timing associated with the needs of the various utilities.
I never knew. I love learning something new every day. 2 years. Who knew? So, ladies and gentlemen, I bet some of you out there didn't know that either. Let's go into your specific project and sort of get, turning the mind back on, if you like. It was mothballed for about 9 years. Things are looking better. You're holding back a little bit at the moment. Price-wise, you think it's going to get stronger. But, Keith, how do you get into that point where you can start to produce that yellow cake? What are we looking at? What are the steps?
Well, I mean, so for us, the first thing, we've always said that to make this final investment decision, there's a few things we'd like to tick off. We need to have the mine development agreement in place.
Mm-hmm.
It's one of the things we need to do.
Yep.
We also have to have, and it's either contracts in place, so we've signed some contracts with some of the utilities, or maybe alternatively, the spot price hits a value where we have some comfort that if we did start up the mine and were to sell material into the spot price, would still be a very, very economic and very, very viable mine. So we need to tick off those 3 boxes at the very least before we actually make this final investment decision. With the financing one sitting there as well. But the financing one is a bit of an interesting one because it's very closely linked to the offtake. So if we were to pursue a debt financing route, offtake becomes much more important. If we were to pursue an equity route, offtake is less important for an equity investor in terms of having a signed contract in front of them. So there's a bit of a playoff between those two things that we're looking at now in terms of the best way to go. But once all 3 of those boxes have been ticked and we make the final investment decision, based on the work that we did in the feasibility study, we believe it's about 15 months before we can actually start to first produce. So during that 15 months, we will carry out the refurbishments of the plant. So there's certain things we need to do around the plant in terms of, pumps and, anti-corrosion work, and there's some civil things we need to do and all those types of things. But at the same time, while we're doing that, there's also the new pieces of equipment that we introduced as part of the feasibility study. So that's the ore sorting that we spoke about. Yep. It's the nanofiltration that we spoke about. It's the installation of the transmission line for us to be able to access grid power on site. So all of those things should be able to be constructed in that same time frame. And then within about 15 months, as I said, we'll be able to turn the plant on, probably produce first product within, a couple of weeks or a month or 2 after that, and be able to ship our first product probably 6 months after we start the mine back up again, and be able to ship that off to our customers.
Keith, we don't have a lot of time left, but what I want to know is, what's your preference, do you think? You mentioned debt and equity before. Is it going to be a bit of both, or it's still too early to say, or what are you thinking?
I think it's going to be a mixture of both, and I think it's going to be probably slightly more heavily weighted towards the equity rather than the debt at this stage.
Okay.
I think so, yeah. I just think that's probably a little bit easier for us to go down, and as we showed in the capital raise that we did a few months ago, where we raised the $25 million, we were very, very oversubscribed from that. So I think we have a lot of support from our investors, and I don't think raising the equity is going to be that difficult. And remember, our capital raise that we need is relatively small compared to a greenfields project. We're only looking at $100 million or thereabouts, which is really a fraction of our market cap, which I think makes it a lot easier for us to do compared to some other companies out there looking at $1 billion or $1.5 billion. That's a lot easier exercise for us. But the one thing that I've really been quite surprised about in a number of conversations we've had is, I think everyone's aware of the traders out there in the uranium space.
Mm-hmm.
But in the conversations I've had with various traders, a lot of them are prepared to do prepayments for us. Now, prepayments in the uranium space isn't particularly well known, but there are a number of traders out there that will do a prepayment for production. And at first glance, you might think, well, a prepayment normally comes at a discount and all this type of stuff, and therefore it's not favorable. But when you go to the banks and you look at the cost of debt these days is very, very expensive.
Is it still expensive? Okay.
Still very, very expensive. I mean, when this ESG stuff comes in, we might see some reductions in that. But as of today, you go to a bank, I mean, you're talking north of 10%, north of 12%, north of 15% for your cost of debt at this stage. And therefore, the discount that these traders want to give actually becomes comparable or even smaller than the cost of debt. So therefore, the prepayment becomes much more attractive for us. And that's another avenue that we're pursuing as well.
All righty. Well, you got a lot on your plate, but what I like about it is, you know, as you said, it's not a capital intensive restart, this project, and the numbers are not huge. And there is a lot of support for Lotus Resources at the moment. Keith, give me 3 reasons why people should be sitting up and taking notice. You know, I like to finish off like this, so hopefully you're a little bit prepared this time, Keith. 3 reasons why you think now's a good time for people to be sitting up and taking notice of ASX LOT.
I think the uranium market, I think everyone's recognizing the importance of uranium moving forward in terms of energy crisis, but also obviously the zero carbon emission targets and all that stuff. And anyone you speak to, whether it be government, whether it be regulators, whether it be companies, I think everyone's beginning to accept that nuclear has got to be part of that conversation now. You cannot get to zero carbon, zero or net carbon zero without nuclear in it. So the fundamentals behind the uranium market are absolutely fantastic at the moment. I think they're the best they've ever been for the last 20 years or something like that. So really good on that. And then the question, well, which of the companies are going to be able to benefit from the most from that demand? I think it's the companies that can come online quickly. Yep. And I think that's one of the benefits that we have with Kayelekera, because it's a proven producer. We already have an existing asset that operated before. The amount of time that we need to be able to bring the project back online is relatively short compared to some of our peers out there at the moment. We're also a proven producer. We know that the Kayelekera project ran at nameplate capacity, produced a high quality product that is known in the market. So even in some of the conversations that we've had with the utilities and the conversion facilities, there's no need for us to provide any samples or anything like that for them to test and all those types of things. We know the Kayelekera product. It's a good product. We've treated it before. It can go straight into our process. So I think that's another benefit for us as well.
Actually, I'd say that is probably one of the best benefits. They know the project, they know it works, and therefore that shortens the time to get to market as well. Keith Bowers, it's always a pleasure to talk to you. Congratulations on the sustainability report, the second one. It's nice to see the benefits that the local communities will be getting from the work that Lotus Resources are doing. Long may that uranium market keep going, because as you said, it's a zero carbon emission. So there you go, ladies and gentlemen. ASX code is LOT, restarting the Kayelekera mine, and a long way ahead of many others out there. So thank you very much, Keith, and we'll look forward to chatting to you again in the near future.
Thanks very much, Kerry. Good seeing you again.